We have Abhay Agarwal with us. Abhay, firstly, welcome to the show. Let's quickly try and understand your take on where are you looking at markets at the moment. Where do you see we're very close to those all-time highs. How do you look at valuations currently?
Yeah, hi, thank you for having me on the show. Our view has stayed the same since last 3 or 4 months, which is that the markets went through a phase of very low participation by investors. And I think that is where we saw sharp corrections across the board, especially in mid and small caps. And now, over the last couple of months, what we have seen is that investor participation has increased quite dramatically in some ways, especially the FPI flows have been strong. Domestic participation from domestic investors has been strong and picking up. So I think the valuations, if you look at the index level, are probably in the fair range, going by the historical standards, though we still trade at a premium to global markets. And at the same time, if you go outside the index in the mid and small cap space, especially, I think there are still amazing opportunities that are available in very good mid and small cap companies that were, that kind of underperformed over the last 3 or 4 years compared to the larger companies, and now are getting re-rated and are seeing higher participation from investors. So I think we are in the fair valuation range as far as I can say. I think there is still upside. I think once the new highs are created, we will see momentum funds, momentum players also come in. So I think there is still juice left for investors in the market.
Right, Abhay. And, you're looking at the mid and the small cap space. Let me take a cue from that. What sectors are you seeing value within the mid and small cap? And, if not sectors, are there some specific names which you have in mind which could be a good play, at a time when markets are very close to their all-time highs?
Yeah. Since we manage SEBI registered funds, my disclaimer here is that any of the stocks that I mentioned are not investment recommendations, and they are part of our portfolio most probably. So with that disclaimer, I would say that we are continuing to see opportunities in the space of mid and small financial services companies, which includes small banks, private banks, small NBFCs, and some of the large microfinance companies. And the reason for that is that if I look at pure valuation, they are trading at a significant discount to the industry leaders, and they have very similar performance metrics. In fact, some of them are growing faster at 25 to 30% year-on-year loan growth book, with very low credit costs, very strong management. And I think the overall environment on both raising funds to lend as well as the demand for credit is very strong. So I think we have some bets in our portfolio like CSB Bank, also South Indian Bank, and some of the capital market players like Angel One, and they have already done well. So I think there is still room for these smaller financial services companies to grow in terms of valuation. The second space we are looking at are exporters. I think the export as a segment, exporters have taken a beating. The valuation multiples are very competitive at this point of time. Textile, especially finished apparels, is part of our portfolio. We have Gokaldas, we have SP Apparel, and there's another company that we have been adding. So that, I think, is a sector that went through multiple challenges over the last 4 or 5 years, but now is getting into a zone where we can see growth very clearly coming in. Auto ancillary exporters is another space that we are forming a bullish view on. Large cap IT in large cap plays is another sector that we think has got beaten down. Valuations are very, very lucrative right now, especially for large companies like Infosys, TCS. So that's another space that we are quite keen to look at with a 6-month to 1 year horizon.
Right. So let me take a cue from that. You've spoken about apparel exporters in particular. Isn't there absolutely any concern with regard to demand coming in from US and Europe? Largely on the back of all the rate hikes that have happened, don't you expect some kind of a slowdown to hit some of these apparel companies? Isn't that really the contra argument to buying into some of these export names?
Yeah. So that was our concern also when we started looking at them, and then but as we dug deep, we realized that none of these companies that we're talking about are exporting very expensive, apparel, which is a discretionary purchase. Most of these guys are selling to through large chains like Target, Walmart, Costco, Primark, Tesco, and these are I wouldn't call them commodity, but almost, like cheaper, commoditized products. And the demand there has held up pretty well. In fact, I would say in an inflationary environment, people trade down. So, instead of buying a $100 shirt, people would buy a $40 shirt. And that is where the demand has held up pretty well for our companies. Also, we have seen a slowdown of supply from some of the traditional suppliers like Pakistan, even Sri Lanka, Turkey. Unfortunate earthquake impacted the textile exporters. We are seeing some slowdown coming in also from Bangladesh. So Indian companies they were never very large exporters compared to the overall purchase of the international buyers. And I think whatever small market share that they have, I wouldn't be surprised if they just double or triple it over the next 3, 4, 5 years.
Right. So point taken on that one. You've spoken about Nifty IT. One pocket I'd like to also cover is the pharma pack, right? Within the large cap pharma, we've seen a bit of a rally of sorts, at least as the index has gone up and as the broader markets have also gained. We've seen a bit of a rally even in the pharma space after, a couple of very poor set of returns over the last year or so. Where are you seeing value there, or are you seeing value even now over there?
No, there is definitely value, and I think that is what has attracted some of the large investors who are looking at value buying. Because this is one very large segment of the Indian market that has underperformed for last 3 or 4 years. The concerns still remain. So, the pricing pressure, especially in the US market, is there. UK market through NHS has gone through a tremendous price correction of products. There is competition. Chinese manufacturers are not going anywhere. Indian companies are still dependent on key raw material ingredient supplies from China. So it's a complex situation, and it varies also from company to company. Each company is different. Sun Pharma is different from Dr. Reddy's. Dr. Reddy's has a different strategy from Divi's. Divi's has a separate strategy from somebody else. So it's very difficult to paint the entire sector with one brush. But clearly, investors are looking for value investing in the pharma space with a 3 or 5 year view and saying that, look, at some point of time, prices will strengthen. There is oversupply. Some of the smaller suppliers will go out of the market, and that will lead to re-rating. So we're not jumping in. We have Divi's in our portfolio, but we are holding that position. We are not looking to add anything more till we see signs of price appreciation.
Right. Abhay, and very quickly before we let you go, also currently the space that's really buzzing over the last couple of weeks is the life insurance sector.
Yeah.
Valuations, especially in the month of March post the budget, had really come off. How are you looking at valuations right now in the likes of an HDFC Life, in the likes of an LIC, in the likes of an SBI Life? How are you looking at valuations there in that space?
So in the private insurers, I would say the valuations are still elevated. They are like 2x or double of the global valuation. So on a pure value basis, these are not stocks that a growth investor would buy. And the growth is also kind of double digits, mid double digits, nothing more than that. So I think taking valuations into account, I think these stocks can still go through price correction. LIC is a completely different company, very attractive on valuation, but there are a lot of moving parts there. So I think it would be a brave heart who will try to bottom fish in LIC.
Right. Thanks so much for that, Abhay. It was a pleasure speaking with you. That was, of course, Abhay Agarwal from Piper Serica on ET Now, giving us all of his views. But let's quickly move on.